Good morning, students. I am Dr. Najmi Jispalla, Assistant Professor. In this class, we are going to learn about piecemeal distribution, Unit 18, Introduction. Till now, the discussion was based on the implicit assumption that all assets were realized and the settlement was done on the same date. In fact, on the dissolution of a partnership, assets are sometimes realized gradually over a period of time. In such a case, it may be agreed that different parties are to be paid in order to different as and when assets are realized without unnecessarily waiting for the final realization of all the assets. Here, some of the order of payments we should follow. So, in this slide, we will see the order of the payment will be as follows. The first order is realization expenses. The second point is for provision for expenses that are to be made. The next one is preferential creditors, that is income tax or any payment made to the government. The next point is secured creditors, up to the amount realized from the disposal of assets by which they are secured. And for the balance, if any, to be paid to unsecured creditors. These are the order of payment. First, we have to make the realization expenses, then provision for expenses, then tax and other expenses will be made for the expenses is pending for the government. We have to check. After that, we have to settle that reduce, then secured creditors, then unsecured creditors. Then and here unsecured creditors in proportion to the amount of debts if more than one creditor. Then partner's loan we have to settle if more than one partner, in that case in proportion to the amount of loan. Next, partner's capital. The order of payment may be made by any one of the following two methods: surplus capital method, proportionate capital method, highest relative capital method, or maximum possible loss method will follow. And meaning of the piecemeal distribution. Piecemeal distribution of cash is concerned with systematically distribution of cash at the time of dissolution of partnership. Dissolution of partnership when it was assumed that the entire dissolution process is completed in a day, but it is not the truth. The dissolution of a firm is a lengthy process. Then we can see the importance of piecemeal distribution. Point number one, assets will be realized gradually and hence whenever cash is received, cash will be debited and the realization account credited. The next point is the statement of piecemeal distribution will show how cash is to be utilized. Then we can see the surplus capital method or proportionate capital method or highest relative capital method. Under this method, actual capital of the partners on the date of dissolution is compared with their proportionate capital determined on the basis of minimum capital per unit of profit that determines surplus capital of the partners. Surplus capital is paid first and any balance left thereafter is distributed in the profit sharing ratio. This ensures that final balances of partners show their share of realization profit loss and thus no settlement need to be done at that point of time. Then we can say the illustration one. I have given some of the sums for your easy understanding. First, I just read out the question. Capital as on the date of dissolution for P 55,000, Q 37,500 or 31,500. The profit sharing ratio is 5 is to 3 is to 2. Then statement showing the highest relative capital or absolute surplus Listen, in that particular column, we have to write it actual capital, how many P, Q, R is there, P, Q, R is there. In that particular column, we have to write it actual capital for company P, how much? 55,000. Company Q, 37,500. Company R, 31,500. Then the profit sharing ratio they have given. See here, profit sharing ratio 5:3:2. 5 for P, 3 for Q, and for R 2%. Okay, ratio is 2. Actual capital divided by profit sharing ratio is equal to proportionate capital. Actual capital divided by profit sharing ratio is equal to proportionate capital. Consider the smallest of proportionate capital as per 3. In here, that is for this actual capital divided by profit sharing ratio is equal to proportionate capital, right? So actual capital how much for P? For P, 55,000 divided by 5. 5 is the profit sharing ratio. Then you will get 11,000. Then Q, 37,500 is the capital. The ratio is 3, right? So 37,500 divided by 3, you will get 12,500. Then for R, 31,500. Profit sharing ratio is 2. So 31,500 divided by 2. That is 15,750. Next, consider the smallest of proportionate capital as per 3. How much? For P is not there. P is not there. Then Q, 4,500. That is based on the proportionate capital as per 3 as base capital into profit sharing ratio. Base capital into profit sharing ratio. Base capital how much? 11,000 into profit sharing ratio for Q is 3, right? Based on that, we have to calculate. We will get 4,500. Then for R is equal to 9,500. R is equal to 9,500. Okay, then you come to this surplus capital. We should calculate how much is the surplus capital. Actual capital how much? 55,000, right? Consider the smallest portion's capital as per 3. How much? 55,000. That's also 55,000. So 55,000 minus 55,000, 0. Then company Q, the capital is 37,500, right? 37,500. That is base capital into ESR, you will get 33,000. Should write here 33,000. 37,500 minus 33,000 is equal to 4,500. 4,500. Then come to this company R. Company R. Company R. Smallest proportion 22,500. 31,500 minus 22,000. You will get 9,500. 9,500. Okay. The ratio is for Q3 and R is 2. So the surplus capital 55,000 minus 55,000, 0. Then come to this next company Q. Company Q. Company Q. 1,500. 1,500. Company R. 4,750. 4,750. Okay. Then you come to this profit sharing ratio PSR. Here 4,500 are there. For our company 3,000 are there. Company Q 4,500. Company R 3,000. Surplus capital as per 5 divided by PSR. Surplus capital divided by PSR. For P nil and Q nil. For R 6,500. For R 6,500. Consider the smallest of proportionate capital as per 7. 7. This means that all will be paid 6,500 to clear off his absolute surplus capital. Then we can move for the illustration 2. Illustration 2, capitals X is equal to 15,000, Y is equal to 18,000, Z is equal to 9,000. Profit sharing ratio 2:1. Profit sharing ratio 2:1. Statement showing the highest relative capital. All the 3 companies they have given, right? Actual capital is there. Company X 15,000. Company Y 18,000. Company Y 18,000. Company Z 9,000. Company Z 9,000. Profit sharing ratio they have given 2:1. X 2, Y 2, and Z 1. Then how to find out the proportionate capital is actual capital divided by profit sharing ratio. Actual capital for X is 15,000, right? So profit sharing ratio 2 for 50x company. So 15,000 divided by 2 is equal to 7,500. Proportionate capital for X is 7,500. And proportionate capital for Y is 18,000 divided by 2. 18,000 divided by 2, 9,000. Then proportionate capital for Z, 9,000 divided by 1, that is 9,000. Next, consider the smallest of proportionate capital as base. Proportionate capital for X limited 7,500, right? Proportionate capital as base into profit sharing ratio. Here 7,500, 7,500 into 2, 15,000. Then company Y, 7,500 into 2, 15,000. Company Z, 7,500 into 1, that is 7,500. Then you come to this surplus capital, we have to find out. Surplus capital means actual capital minus, consider the smallest of proportionate capital as base into profit sharing ratio, that is the fourth one. The first one minus fourth one. 15,000 minus 15,000 is nil for X limited and Y limited. 18,000 minus 15,000, that is 3,000. Then Z limited, 10,000 minus 7,500, that is 1,500. Since the surplus capital for Y and Z are in their profit sharing ratio, no further steps are required. Then we'll move further. Illustration 3. Partners M and N and we have called upon you to assist them in winding up the affairs of their partnership on 30th June 2013. Their balance sheet as on that date is given below. Liabilities and assets they have given. Just to come to this liability column, sundry creditors 17,000, capital of M company 67,000, capital of N company 45,000, capital of P company 31,500. Then come to the asset side, cash at bank 6,500, cash at bank 6,500, sundry debtors 22,000, stock in trade 13,500, plant and equipment 99,000, loan for M 12,000, loan for N 7,500. Both sides column 1,60,500, 1,60,500. The partners share profits and losses in the ratio of 5:3:2. Then cash distributed to the partners at the end of each month. A summary of liquidation transaction are as follows. July 16,000 collected from debtors. Balance is irrecoverable. and 10,000 received from sale of entire stock, then 1,000 liquidation expenses paid, then 8,000 cash retained in the business at the end of the month. Then August 1,500 liquidation expenses paid as part of the payment of this capital. We accepted on equipment for 10,000. Book value rupees 4,000. Next, 2,500 cash retained in a business at the end of the month. Then September, 75,000 received on sale of remaining plant and equipment. Then 1,000 liquidation expenses paid. No cash is retained in the business. Next, we'll move for the solution part. Put 5 columns, particulars column, creditors column, then capital 3 columns, M, N, and P. Just to write the particulars column, balance due. How much is the balance are there? For creditors 17,000. For capital of M company 55,000. Capital of N company 37,500. Capital of P company 31,500. These are the items which was given in the question. Next, the amount distributed on 31st July. The amount distributed as on 31st July. For creditors 17,000. They have distributed the amount creditors 17,000 and P, and for P 6,500. There is no amount distributed to company M and the company N. Then balance due, we have to find out how much is the balance due with us. Creditors nil, capital M 55,000, capital N 37,500, capital P already 31,500 available balance, 6,500 we have given. So you should subtract that 6,500 from 31,500. You will get 25,000. Next, you come to this cash paid to N. Cash paid to N. Cash paid to N 4,000 and the P 10,000. Then equipment given to P on 31st August 55,000. For M 33,500 for N and 15,000 for P. Then balance due C minus D 41,500 for M, 25,400 for N, 9,600 for P. Balance due and here C minus D. The amount paid to partners on 30th September, 41,500 per M, 25,400 per M, 10,600 per P. Loss on realization, that is unpaid balance, E minus F, paid balance, 13,500, 8,100 for N, and P for 5,400. Secured prepare a schedule of cash payment as on 30th of September, showing how the cash was distributed. We can prepare the statement showing the distribution of cash according to proportionate capital method. Working notes I have given here. Statement showing the calculation of highest relative capital particulars column, then capital for M, capital for N, and capital for P. They have given in the question, right? Capital M, 67,000, right? N, 45,000, and P, 31,500, which was given in the question. Then loan 12,000 for M, loan 12,000 for M, which was given in the question. Loan 12,000 for M, then 7,500 for N, 7,500 for N, and there is no loan for P. There is no loan for P. Then actual capital, the capital amount minus loan for M, capital is 67,000, loan is 12,000. So 67,000 minus 12,000, 55,000 for M, and for N, 45,000, 45,000 minus 7,500, the amount is 37,500. 37,500. Then for P, 31,500 is there. There is no loan. So the balance, the actual capital is 31,500. Then actual capital divided by profit sharing ratio. Before that, we have to write it, the profit sharing ratio. How much is the profit sharing ratio? 5 for M, 3 for N, 2 for P. So here, actual capital divided by profit sharing ratio. Actual capital 55,000 for M, 55,000 for M, and the profit sharing ratio 5 for M. So 55,000 divided by 5, that is 11,000 for M, and for N 37,500 divided by 3, 37,500 divided by 3, 12,500, then For P, company P 31,500 divided by 2, 15,750, 15,750. Then we can see proportionate capitals taking M's capital as base capital G express of actual capital over proportionate capital. Okay. How much actual capital is 55,000. 55,000 for M limited. For N limited, 33,000. For M limited, 33,000. For Y limited, for Y limited, 22,000. For Y limited, 22,000. And just to find out the balance for A. A means the first column for M limited 0 because 55,000 minus 55,000, that is 0. Here 33,000 is there, right? The proportionate capital. I'm taking as base capital G excess of actual capital, that is 11,000 into 3, 33,000. 37,500 minus 33,000, how much? 4,500. So we can write here 4,500. Then for P company, 11,000 into 2, the proportionate ratio 2. So 11,000 into 2, 22,000. So you should subtract 31,500 minus 22,000. You will get 9,500. You will get 9,500. You should write the proportionate ratio 3 and 2. 3 for N limited, 2 for P limited. Just to find out the balance. Profit sharing. The surplus capital divided by profit sharing ratio. Surplus capital, how much? 4,500 for N limited, and there is no surplus for N limited, right? So 4,500 divided by 3, you will get 1,500. For P limited, 9,500 divided by 2, 4,750. Then we will find out the revised proportionate. Revised proportionate, how much? We have to find out revised proportionate, that is 3 into 1,500. 3 into 1,500, that is for N limited 4,500. 4,500. For P limited 1,500 into 3, 1,500 into 2, that is 3,000. 3,000, you have to write 3,000 in P company, 3,000. Just you subtract 9,500 minus 3,000. Here 6,500 for P, but N limited, there is no balance. 4,500 minus 4,500. Okay, 0. So this scheme of distribution of available cash, first installment up to 6,500 will be paid to P. Next installment up to 7,500 will be a distribution between N and P in the ratio of 3:2. Balance realization will be distributed among M, N, and P in the ratio of 5:3:2. Then statement showing the calculation of cash available for distribution. We should find out how much is the cash available with us for distribution. See here, in the month of July, August and September. 3 months are there, right? July, August, September. First, we have to find out how much is the fund available with us. For July, 6,500, August, 8,000, and September, 2,500. We should add the net amount. We should add the net amount for July month. We should add the net amount for July month. How much is the net amount? 25,000. Net amount is 25,000. Next, we come to this next part. For August, minus 1,500. August minus 1,500. For September, 74,000. For September, 74,000. Come to the next point, net amount released. Next, list closing balances. Closing balances. Closing balances. 8,000. 8,000. For July month and 2,500 for August month and September month, 0 amount. Then amount available for distribution. Just to subtract it. Just to find out the balance. 23,500. 23,500 for July month, that is 25,000 plus 6,500 minus 8,000 minus 8,000. For August month, 4,000. The month of September, 76,500, because there is no closing balance. There is no closing balance. Then we'll see the statement showing the manner of distribution of the amount available in August and September. The particulars: first 7,500 July, till August 4,500, September 3,000. August 4,500, September 3,000. Then balance 83,000 cash and equipment. Balance 83,000 cash and equipment. That is 41,500. 41,500 for July month. 24,900 for August month, and 16,600 for September month. 16,600 for September month. Then equipment, cash and equipment 41,500 for July month. August month 29,400. Then September month 19,600. Less actual distribution in August. We have to subtract actual distribution. 41,500 minus 41,500 is 0. Then here 29,400 minus 24,900. First we have to add and subtract it. 4,000. Then for this September month, 10,000. Actual distribution in August month. Actual distribution in August month. Then the manner of distribution in September. For July, 41,500. August, 25,400. And September, 9,600. Then we'll move for the next illustration. A partnership firm was dissolved on 30th June 2013. Its balance sheet on the date of dissolution was as follows. Liabilities, the amount, the debit side, and the asset side also. Assets and the amount. Just I wanted to read the question. Capitals. Matring 38,000, Mohit 24,000, Rupa 18,000. Loan account, Mohit 5,000. Then sundry creditors 15,000. Asset side, cash 5,400. Sundry assets 94,600. Both sides total 1 lakh. Both sides total 1 lakh. The assets were realized in installment and the payments were made on the proportionate capital basis. Creditors were paid 14,500 in full settlement of their account. Expenses of realization were estimated to be 2,700, but the actual amount spent on this account was 2,000. This amount was paid on 15th September. Draw up a memorandum of distribution of cash. It was realized as follows. On 5th July, 12,600. On 30th August, 30,000. On 15th August, 40,000. The partners shared profits and losses in the ratio of 2:2:1. Give working notes. Solution statement showing the distribution of cash according to proportionate capital method. Particulars column, then creditors column, then Mohit's loan account column, Patrick column, Mohit column, then Rupa column. You put 6 columns. First, we can see the balance due. Balance due, which was given in the question. Sundry creditors, right? 15,000. Creditors 15,000. You should write it in the creditors column. Then Mohit's loan 5,000. Patrick 38,000. Mohit 24,000. Rupa 18,000. Then cash paid. How much cash they have paid? 5,400 minus 2,700. 5,400 minus 2,700. How much? Creditors 2,700 we have paid. So we can write there 2,700 is the balance. For Mohit loan and order for Mohit or Rupa, and of the amount we have paid. So put the value nil just to find out the balance. Balance of unpaid for creditors 12,300. Mohit loan 5,000 minus 0, 5,000. Patrick loan 38,000. Mohit loan 24,000. Then Rupa 18,000. Just to come to the next part. First installment of 12,600. From that first installment, we are giving how much is the amount? 12,600 amount is there. We are going to give the first installment on 5th July, 12,600. proportionate basis. What basis? On 30th August, we are giving 30,000 and 15th September, we are giving 40,000. The partners share the profit and losses in the ratio of 2:2:1. Give work notes on 5th July. Listen here. How much is the amount? First installment 12,600. 12,600. This 11,800. We are going to give you creditors. Then 800 for mortgage loan. We are giving the balance amount to mortgage loan. 800 is balance. So Orthric mortgage under Rupa, there is no value. We are not going to give any amount to Orthric mortgage under Rupa. Then balance unpaid for creditors 500 rupees only. For mortgage loan 2,000, 4,200. Then balance unpaid for Orthric 38,000. Mohit 24,000. Rupa 18,000. Plus return of 500. We are write off 500 for creditors. So then zero value. Then the second installment of 30,000. Second installment they have given, right? Second installment they are going to give 30th August from 30,000. Second installment 30,000 we are going to give. Mohit loan 4,200. Mohit loan 4,200. For Orthric we are going to give 16,320. And for Mohit 2,320 and Rupa 7,160 and Rupa 7,160. Here I have given the workings, how we are distributing the second installment for all the shareholders and the others also. First 4,200 we have given mortgage loan. Then when you are reading this working notes, you can add and you can understand more. So see here for Rupa 7,160, 7,160. They are distributing the second installment amount. Then we'll move for the balance unpaid. Balance unpaid for Orthric 21,680, 21,680 and Rupa 10,840. 10,840. Then third installment. Third installment, see here. How much amount is the third installment? 40,000, right? 40,000. 40,000 plus 700 amount is there. So that some 700 amount also we should add. We should add that 700 amount. So 40,000 plus 700 for Orthric, we are going to give 16,280 and Mohit 16,280. Then Rupa 8,140. 8,140. So find out the unpaid balance. Loss on realization. unpaid balance loss on realization. That is, just to subtract that amount, 5,400 for Epic, for Mohit, 5,400, then Rupa, 2,700, Rupa, 2,700. For your understanding, I have given the working notes. Just to read it. Thank you.